what's going to be resting below that low? Sell stops. That's why I put sell side liquidity here, right? That's why I put sell side liquidity there and daily low there, because now there's a nice look accumulation of sell stops sitting below this swing low right here, right? Sitting below this swing, because we came down into a mitigation block, right? That's all the people over here that went short coming down this way right here. They're trapped now. So we came down into this mitigation block, stopped right at the top of this breaker, because this high broke this low. So we stopped right at the top of the breaker, and then we pushed up back into the consolidation. So now we've set up a nice higher low for people to buy up under. You know what I'm saying? So now the smart money have a higher low to come down and buy up under to take it up. You see what I'm saying? So now healthy price action again, right? That's why I was like, let me know about that 38.45. Appreciate that 100. Appreciate that. Here to learn and share, right? If we come back down to that 38.45, that equilibrium of that that weekly, let's put a line at that price. We said 38.45, right? 38.45. So 38.45 right there. That's good enough. Let me get it on 38.45. Nice round number. Style. Let's we'll leave it black. Red, not yellow. We'll leave it black. Dim it down a little bit so we can see through it. Okay. All right. So now that 38.45 number that we was talking about at that order block. Now look how it's all lining up, right? Now we talked about that order block on the weekly before we even marked anything out. But now look at where that number lines up. Remember, we was on the weekly. All we had was the top and bottom line. Let's put this in the folder together. I don't need this TDA no more because that's the old one. Delete. That's our old TDA right there. That's all the old junk we had. I don't need this one no more because we just did new one. Now. Okay, so going there, when we first talked about it, right? That's all we had, right? That's all we had. And we was on the weekly chart pretty much. And I was like looking at this order block. And I was like, let me know what the mid price of that order block is, because that below price, that's the first PDA we get to this weekly order block. So if we pull back to that weekly order block and it do its job, if we get to equilibrium and push up, you know what I'm saying? I don't want it to go past equilibrium. So I'm giving it from the high to equilibrium to do its job. I don't want it to go past that. That's why I was like, let me know what that 38.45 is, right? Now that we know what the 38.45 is on the lower time frames, now let's drop back down to the daily and look at what's transpiring in that area, right? So in that area, the 38.45, that puts us right at equilibrium for the overall time frame, right? Which is a good place. You come up, right? You took out buy side liquidity right here. We took out the buy side liquidity, right? Came up, got into this fair value gap over here. This big daily fair value gap, wicked down off of it, right? The rejection block held up. The price didn't want to go higher. Went up into the rejection block and sold back down. Came back down and touched there. Now, is this as low as the algos want to go before bouncing? I don't know. Could be. But in my opinion, healthy price action would be to come back down, fill in this gap, this daily gap right here, take care of the gap work, stop at the order block right here at the equilibrium of the weekly order block, right here at the daily order block, right there at equilibrium of the overall range, and then bounce. So all of this right here All of that just based off of eyeballing it on the weekly, saying, let me know what's going on with this number at this order block. Now we got lower time frame confluence of, yes, that would be healthy price action, because now with this closure here, it's giving us new sell side liquidity to run. So now the risk to reward of going long, right? Now you're, what's the thing I had to hit? Long position. Now your risk to reward for going long, just say if we just went long from where we closed at on Friday, right? Now your risk to reward for going long, right? We're just gonna put it a little bit below. This is the low. We just go low to high instead of just trying to put it. We're just gonna go low. Boom. That's the low. This is your low hanging fruit. Your low hanging fruit, it's a 1.2 risk to reward. Your target, this high right here, it's a 3-to-1 risk to reward with this swing low being in play right now. Whereas before, the only thing we had was all the way down here, and it was a negative risk to reward. Now we got, God dog it, Tim. Now we got a new swing low in play that gives the risk to reward a bit. Look, it's looking prettier. It's looking prettier to go ahead and try to scale in, right? Now, what would be healthy would be to pull back and take care of this gap work before proceeding up. That would be healthy. Is this the pullback right here that the algos want? We don't know. We don't know. But we still have not going up. This rejection block did its job. We came down, right? Bounced off the mitigation block. Now, let's see how next week play out and see if we get the pullback and then the takeoff. Because remember, bullish activity, we want the pullback, then the takeoff. Bearish activity, we want the rally, then the pullback, right? So if we want it to be bullish, we want to see the pullback, then the rally.